Now, a recent report in the Nigerian media suggests that businesses in the country source only 1% of their financing from banks. Joining us now for an overview of business financing in Nigeria is Kayode Akindele, who's the director at JMH TIA Group. Kayode, great to have you. Okay, from your views, how much money, how much credit actually flows into the real economy?
Not that much, not as much as the government would like, to be honest. Most of the credit goes to a lot of the big corporations like Dangote and the multinationals, while the key drivers of the economy, which is the agricultural sector and the SMEs, are starved of funds.
All right, now obviously this is something that even the governor of the central bank has added his voice to, and often when he makes decisions through the MPC, it is really in view and in line with wanting to get more credit flowing into the real economy. What are the blockages? What's the problem here?
I think that two main. I think one of the issues is on credit. It's very hard to keep track of credit in Nigeria. We haven't got effective credit bureaus. I mean, in the last couple of years, some credit bureaus have been set up, but in ways of actually being to track debtors has been very difficult. So the cost of defaulting loans have gone up, and that's increased the interest payments people make. Also, the lack of basic infrastructure. If you want to set up a business in Nigeria, you have to plan for your own power, probably your own transport network, and that adds to the cost of business. And so to make any business viable, margins have to be pretty high to get that into place.
I mean, you use the word the risk of defaulting, and this is really something that the banks have been quite susceptible to. The reason that you've had, well, not the reason, but one of the reasons you've had a financial crisis in Nigeria is poor capital adequacy on the parts of the banks and unbridled credit into key sectors of the economy, and then a lot of the lenders not honoring those loans. In the midst of these banking reforms, how are some of those problems being addressed?
I mean, the key problem is that the banks didn't do the credit work. It was very easy to, if you look at the debtors, there were mainly a small select group of companies and individuals in the upper echelons of society who were taking most of these multiple loans from multiple banks and using the same asset as collateral. The banks, it was easy for the banks to go in together, these big corporations, and do very little credit work for it, and they paid for it. I think in essence, when you look at the SME sector and some of the smaller firms, you actually need to do proper credit analysis and proper creded work on them. And the banks were low to do that. I think a lot of the banks are really looking through their credit processes, trying to bring in more professional help in there and trying to make sure that it's more thorough in what they do.
Where we do see credit flow, the concern is that a lot of the lenders focus very much on short-term credit. They want their repayments, they want them sooner rather than later, whereas we know that the business life cycle is beyond 5 years and above in most cases. What needs to change in terms of banks' approach?
I think the banks, they can only really lend as much as because they have the mismatch between assets and liabilities. In a sense, we don't really have that much of a savings culture in Nigeria. So if you look at savings accounts and the bank's deposit makeup, you find that over 80% of the deposits are less than 1 year, or either in current accounts or at most 12-month deposits. And so with that in mind, it's very hard for them to do longer term lending without having too big a mismatch in that sense. Now, a few of the banks like GTB, First Bank, and UBA, they've issued bonds with 5-7 year tenor to try and bring in those sort of assets so they can do longer term lending. Now, until we kind of develop that savings culture where banks have access to longer term financing, that's longer term deposits in that sense, then you're not going to be able to finance longer term projects.
What happens to those bringing their money into Nigeria, particularly through FDI? I know some would be very big deals, but you know, we've had some bullish sentiment coming through. Kayode, expected credit growth at 15% in 2011. Those are just projections. The economy to grow at 7.8%. So many investors think they can come into Nigeria, set up a business, and through syndicated means will be able to find credit. You say banks are prone to lend to big business, but what about those with great ideas, private equity companies coming through and still need a little bit of additional capital? What kind of circumstance are they going to find in Nigeria?
The banks are not short of liquidity. It's just really how to deploy that. And with a good business plan and the proper backers, the banks should be in a position to be able to support that. Now, the key problem for the banks, in a sense, is that a lot of them have retreated because of the problems they had in the last couple of years. They're trying to sort out their balance sheets, and they retreated from the lending. So even the growth they're expecting in credit is from a very low base. And even if that growth is achieved, you have to look from the base it's coming from. And in terms of 7% growth, if you look at it, it's not really denting the unemployment problem. And until we can address that growth into the agricultural sector and also into the SME sector, you're not going to see a significant reduction in unemployment.
Let's talk about alternative funding models. We've also heard the CBN talk about setting up a manufacturing fund and an enterprise development fund targeted at agriculture. Some of the big banks were supposed to come through, particularly on the agricultural front. How much has been achieved?
Well, the idea behind it is really the CBN trying to pool funds together and then use the banks to distribute those funds. Now, that relies on the banks being able to do the credit work and basically find out, basically get the applications from people who want access to those funds, do the credit work on them, and basically manage those funds for CBN. Now, the various banks' ability to do that has been called to question for the last couple of years, so that's been a slowdown. There's also some analysts who believe that this kind of various intervention funds is not really the job of CBN. It should be the Ministry of Finance.
Yeah. Okay. Exchange rate, a much better looking Naira in the longest time, above 152 Naira. But this has also been a big problem for SMEs in Nigeria, is that a lot of businesses, as you said, have to provide for their own power, inputs and those kinds of things. So there are a lot of imported costs, and a volatile exchange rate has been a burden. How do we ensure that the banks can step in managing currency risk if they're not going to provide full-scale loans? How can they help mitigate some of the risks incurred?
In terms of the currency, to be honest, in the last 10 years, apart from the blip we had in 2008 when Naira moved from 120 to 150 in a space of about a couple of months, the Naira has been fairly stable, and that's helped because Nigeria is very import dependent, and that's helped a lot in that sense. I think in terms of the current volatility we're seeing in the Naira is really based on analysts are a bit worried about the 2011 budget, which is seen as highly inflationary, and also in the sense that the CBN is spending a lot of the foreign reserves trying to protect the Naira. And so that has led to massive demand for dollars in the local market. And the CBN also in the process has also reduced the amount of currency going out to the BDCs. The bureau de changes are normally the areas where most of the SMEs and the smaller corporates get their foreign exchange from. So that's when you've seen the widening gap between the parallel market and the official market. I think CBN is trying to rectify that by increasing the flow of dollars to the BDCs to try and face that. And also in terms of the MPC rulings to try and cut down liquidity in the banks in a sense to stop the demand for dollars so increasing.